Hi, this is Alvin from Dr. Wealth. It's the end of 2022 and I'm now shooting the last video of the year. And many people will start to ask me what is my view about 2023. So I'll be giving you 7 predictions of the markets and how things can unfold. Maybe you can see whether I get some of these things right. So let's start off with the very first prediction. And my first prediction is that inflation is likely to go below 5%. So now it's hovering about 7+%, and I think that it's going down. Although a lot of people may feel that, no, I still think that things are very expensive, inflation is still high, I can really feel it in my pocket. But I do think that it's coming down for few reasons. So the first reason is that commodity prices have already came down. It's peaked around in the middle of 2022 and prices have been down from the highs by quite a fair bit. So I think that this should continue in 2023. Even if it doesn't go down further, I don't think it will break the high in June 2022. So that is one of the key leading indicator that I look out for when it comes to inflation. And in terms of the US inflation numbers, we can see that it has been steadily coming down also since June 2022, right? So the rate hikes actually were working. And now we are at 7.1% in November because December haven't ended yet at the time of shooting. But next month onwards, we will start to lap the increased inflation in 2022, right? So because Jan 2023 will compare to Jan 2022 in terms of the inflation numbers. So if Jan 2022 already was 7.5% higher, right? So you're already dealing with a higher inflation rate at the start of 2022. So likely Jan 2023 cannot be up another 7%. Okay, there's a lot of compounding effect built inside. So I do think that it's likely to come down and potentially come down below 5%. Whether we'll hit the 2% target, which the Fed wants to aim for, I don't think so that we can achieve in 2023. Maybe 2024 or 2025 it's more likely to happen, but I think it should be quite safe to go below 5% for a good part of 2023. So how to prepare for this? It doesn't mean that when this inflation rate comes down, the prices will come down in general, right? It might stay on like 3-4% kind of inflation rate. That means that the prices are still high and you still need to stretch your dollar, curtail your expenses, unnecessary ones as much as possible. Okay, so in order for you to tide through this inflationary period. Prediction number 2, I think that the Federal Reserve would stop hiking interest rate by the first quarter of 2023. So this is controversial because a lot of people think that the rate hikes will continue. And this is based on, first thing is the projection from the Federal Reserve members. And they projected the peak interest rate in 2023 to be about 5.1%. And we are currently at 4.25 to 4.5%. So which means that there is very little room for them to hit the peak interest rate of 5.1% in 2023. With that, I think 2 hikes are more likely. They will carry on with a 0.5% hike and then follow on by a 0.25% hike, and I think that will reach that 5.1% already. That's where they will pause and reassess whether they need to hike the rates again. But I think we are safe to say that we are very close to the pausing of these rate hikes, and that's why I think that's good news for the markets. And how to prepare for this? Of course, interest rate will affect all asset pricing. It depends on what you invest in, right? So I would think that growth stocks, after being whacked down in the good part of 2022, they should have a sigh of relief in 2023, and prices may start to stabilize and might even bottom. And bond yields are likely to stabilize as well, right? They are unlikely to go up further because interest rates stop rising, right? So they might just pause there, and the yields are probably as good as what you're going to get. And if that is so, if you want to lock in longer tenure to secure that yield, current good yields, you might want to consider as well. Then lastly, USD will stop strengthening, and which means that companies will start to report lower forex losses. And if there are forex traders out there watching this video, might want to take note of this trend change. Okay, because even for the past few months, yen, euro, pounds, even China renminbi, they all started to strengthen against the Sing dollar, strengthen against the US dollar. So this is a big trend change that I guess forex traders want to know as well. Prediction number 3 is recession is going to happen in 2023. And I think I'm quite sure about this because the yield curve has already inverted. So I've done videos of this yield curve inversion before. It's a very good predictor of recessions. And in a history of the last about 60 years or so, right, it's only didn't happen once, right? So the hit rate is actually very good, maybe a 80% accuracy rate. So the yield curve have already inverted for quite a while, and it's quite a deep inversion. And that usually precedes a recession. And we don't have a recession in 2022, but I think it is very likely in 2023. So how to prepare for this? I guess it is not so much about the investment. Okay, I'll cover the investment later. But the important thing is that, you want to keep a job, because during recession, that is where a lot of retrenchment happens. And as long as you get to keep your job, have your career going, you should have a chance to save more money and invest in the markets. Okay, if to prevent this kind of unfortunate things from happening, one should still take precaution, right? Have enough emergency cash. It's not a time to really spend your money wantonly. So I do think that this is a period where you have to consider the worst case scenario. And also business owners, you probably have to tighten your expenses, right? Because likely revenue will be harder to generate as well as spending slows down. Prediction number 4, market bottoms. Okay, so a lot of people expect 2023 to be a very bad year for the stock market, and they expect the bear to run rampantly and bring down the share price down even further. But I think otherwise, because leading from the recession discussion just now, if they officially announce a recession, if you take a look at this table, let me blow it up for you, you will realize that after a year after the recession, you can see that most of the time the market do very well. Okay, these are S&P 500 returns, right, as compared to the recessionary period. So once they announce a recession, 1 year later, you can see the track record is very good. The S&P 500 usually up a lot, and 3, 5, 10 years away from the recession announcement, the S&P 500 has always been positive. Okay, so with that statistics, which means that, what you should do is, when the recession has been announced, it is your last chance to buy at the market low, right? So don't miss it and don't get spooked out by this announcement. I know recession always sounds like a very terrible thing, but it's not a terrible thing for the stock market. Historically, it has been proven that it's likely to be a stock market bottom. Prediction number 5, there will be a lot more cybersecurity merger and acquisitions. Okay, why I say so is because companies or private equity firms such as Thoma Bravo has been very aggressively buying up all these cybersecurity companies. As you can see, in these past few years, they bought Proofpoint, SailPoint, Ping Identity, ForgeRock, Imperva, Barracuda, so many more to come. And I also list them down, potential targets like CyberArk, Tenable, Qualys, Sentinel-1, Rapid7, Darktrace. So these are usually the market cap around where Thoma Bravo has been playing for. Okay, so that's where certain opportunities like this can happen. So how to prepare? If you're interested to play this kind of M&A arbitrage, you can look out for some of these cybersecurity companies, analyze them, and if anything looks interesting, you can buy them and wait for acquisitions to happen. Prediction number 6, China stocks outperform. Okay, so China has been a very bad investment for the past 1-2 years. Okay, so it has also recovered quite a fair bit from October. So the MSCI China has recovered 37% from the low on 31st October. And even that happened, right? It looks like, wow, that's 37%. It sounds like a very big gain. Maybe it's time to come down. But it is just the start, because it has went down so much. This rebound is just putting it back on the long-term trend. Okay, as you can see the trend line on the chart, right? So it actually pierced through the lower trend line, which is very bearish, but then it rebounded very quickly after that. So now it's back in the trend and it's closer to the bottom of the range. So which means that China equities are not expensive even after this very strong recovery. So there can be more upside to go in 2023. And this is Hang Seng, right? It looks the same. Okay, they pierced through the lower trend line, and then after that they will quickly recover. Now it's still back to the long-term trend, and it is close to the bottom of the channel, which means that the prices are not high at all. So there can be more upside from there. And also from a policy front, you see a lot of encouraging news. Of course, the most obvious one is China lifting their zero COVID policy. Right now, the borders are open. Travelers can go in and out of China without having to quarantine. And you also see some other news such as tech regulations are coming to an end. Then they also talk about focusing on economic growth in 2023 and beyond. Okay, so even for the battered property sector, they lifted some of the measures as well. So you can see there was a 180-degree change in the policies. So all these policies add up together does show you that the China economy is likely to recover, and with that, investor confidence get restored, and that's where China equities have more legs to run. And how to prepare? Of course, the simple thing is buy China stocks and ETFs if you want to take advantage of this opportunity. And number 7, the last prediction is IPO for Ant Group. So 2 years ago, Ant Group was pulled out from the IPO process, okay, by the China authorities, and they have been undergoing a lot of restructuring, and now it seems like they are ready. Okay, there was a news leak in November last month that Ant Group is likely to be fined $1 billion, and it is not official yet. They were saying that this fine is likely to happen in the second quarter in 2023. So there were quite a number of sources that have leaked out this news, and so I think it's quite credible, and it is a sign that they are happy. The authorities are happy with their findings, with pushing Ant Group to become a regulated financial holding company. Now they're in the process of applying for the license, and which means that they should pay the fine, then after that get the license, and an IPO is likely at the end of the 2023, late 2023 period. So how to prepare for this? If you're still holding Alibaba, maybe you want to wait until the Ant Group IPO, because it should give a boost to the share price, right? So I know that a lot of Alibaba shareholders have been holding on for quite a while, suffering the downtrend for the last 2 years. It has not been easy, and now there is some light at the end of the tunnel. Okay, just that the light is probably another year away from where we are right now. So that calls for some patience as well. So these are the 7 market predictions. Okay, so I will just repeat down the list. Number 1 is inflation rate below 5%, stock rate hikes by Q1 by the Federal Reserve, and recession is likely to happen in 2023. Stock market bottoms, and that is referring more to the US markets. And cybersecurity M&A will continue, and China equities likely to outperform. And lastly, expect the Ant Group to IPO in late 2023. So I don't know whether I'll be right? Predictions are predictions, and I believe I'll get some right, I'll get some wrong, and it is not meant for you to really just follow very closely and place your investment bets accordingly, okay? Because as I said, some can be right, some can be wrong. I don't even know which one is the ones that really will happen. So I also believe that it's better that you have your own investment strategy that tells you, to guide you what to buy, what to sell, when to buy, when to sell in this kind of situation, rather than betting on prediction, right? Because I'm not a very strong fan of prediction, but I do know you guys like it, so I will give you mine over here. And hopefully you like the video. Give me a thumbs up, subscribe to the channel, and I'll see you in the next video. Goodbye.